typically, when lockups happen, what happens to the stock?
Sure. So, this is going to be the first time for a lot of employees, early investors, even founders to actually sell their shares in the market. And so this has been kind of the 6-month anniversary of a lot of people watching this stock go up, down, left, right, and probably are really excited to take some chips off the table. So we would expect a little bit of downward pressure on the stock. But I should say that actually a lot of that may already be priced in. Beyond Meat is actually one of the most heavily shorted stocks in the entire stock exchange. And so you may actually see that most of this downward trend, post earnings is actually related to the earnings number actually instead of the lockup.
So I'm curious though too. I mean, look, we went back a few months when the stock was up in that $200 level. I think the fear was pretty much everybody was going to sell their shares. I mean, at $85, I mean, with the IPO at 25, is there a little bit more incentive for some of these employees to maybe just sit tight and hope that Beyond Meat kind of rebounds?
I think that's right. You had some pretty optimistic numbers that came out from the quarterly report yesterday. They actually beat expectations. They're starting to turn a profit. This is a different story than maybe like a WeWork or an Uber or a Lyft where they're just hemorrhaging cash. The company's actually generating cash, has a good rosy forecast for 2020, and is showing a little bit of stability. However, Beyond Meat has a lot of competitors from some really well-financed, larger meat companies, and are probably keeping an eye on that too.
So the story is that because the WeWork IPO didn't happen, because you've seen SoftBank probably have to write down a lot of their valuation because of Uber, et cetera, that this is going to change the unicorn landscape forever. And you're even laughing as I say that. But then you have a Beyond Meat, which some of the fundamentals pretty good. This is just maybe a lockup situation. How do you see it?
Sure. So I think it's great to see Beyond Meat actually moving towards profitability, not just growing at all costs. I think that was the wake-up call we saw from WeWork for other future unicorns that are going to come through. When you talk about 2019 being the year of the IPO, actually, only a handful of companies have really had this type of market success with like Beyond Meat has. Maybe you have Zoom, you have Beyond Meat, but not too many have had this 100-200% growth. So I think what it does mean for lockup expiry is that maybe some of these employees that have really only seen markets go one way for the last 8, 9, 10 years since Beyond Meat got started are finally starting to say, maybe having 90% of my net worth all in one stock might not be the best idea.
How can you sort of judge the correlation between how long these companies stay private and once they go public, these sort of lockup expiries? Because I was looking at Beyond Meat's funding rounds, and I was actually surprised. They were actually founded before WeWork. They had pretty much just, I think, about the same number of funding rounds. I think it was 8 or 9. I think WeWork had one more.
Right.
So they were kind of in the same boat. Obviously, two different narratives, but in terms of the length of time, it was basically the same.
Yeah, it was about the same. What I would say is Beyond Meat definitely has spent a lot of time on the research and development side. They really didn't start generating revenue until 4 or 5 years in. Even as recently as 2015, I think they were only generating about $10 or $20 million of revenue. So this company took a little bit of time to really cement itself as a company that was going to actually generate cash over time, whereas WeWork was actually able to kind of show those numbers earlier on. And so I think that might be playing a role here. But you got to remember, some of these employees have been at this company for 9, 10, 11 years, and unless they sold shares on some type of exchange before the company went public, they've been watching this period for the last 6 months. It's probably gotten them a little bit nervous. Things have gone up. Like I said, it's been probably the biggest roller coaster I've seen of any of the unicorns post-IPO.
Oh, interesting. But do we then need to take what's happening with the stock today, or the next few days, as genuine, or we kind of hold off and wait and see?
I think
when the market really prices in, say, moving more to profitability. Yeah,
so I think that if I'm an employee, I was probably hoping that things would be a little bit steady when I woke up this morning as far as the price goes. Now that things have dropped almost 20%, maybe I'm getting a little bit more nervous. So, you might see some knee-jerk reactions from some shareholders. One thing I'll also add is that a lot of the folks that are going to be free to trade starting this morning, it's about 80% of the shares outstanding. A lot of them are in the hands of folks that aren't institutional money managers, aren't long-term holders. There are a lot of folks where this may be one of the biggest financial transactions they make in their entire life, and so sometimes emotion might get the best of you.